This is the European edition of Breaking Banks,
the world's #1 fintech podcast and radio show.
I am Matteo Rizzi.
I am Elizabeth Kleinveld.
I am Don Ginsel.
And together we bring you the unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving financial services sector today.
A truly globalized show with some of the world's most well-known thought leaders and new voices in the fintech sector and beyond.
Join us every month as we explore what makes Europe a phenomenal proving ground for many of the fastest growing players in the world today.
Okay, let's roll.
Welcome to Breaking Banks Europe, the #1 global fintech radio network. This is episode 271, news from the fintech front for November 2025. And I'm joined by Lars Markull and Philipp Buschmann. So Lars is the founder of Embedded Finance Review. Lars, could you tell us what that is?
Yes, of course. Thanks for having me. Embedded Finance Review is an online platform for all things around embedded finance, so including newsletter, podcast, and event series. It's a strong focus on Europe.
Super. Well, that's great because at the end of the news, we're going to go and do a deep dive into embedded finance, a topic that Philipp knows a lot about because AAZZUR, his company, is an embedded finance platform that turns brands into financial powerhouses through embedded banking, cards, lending, insurance. AAZZUR aggregates curated financial services for thousands of point solutions. Did I miss anything?
No, that's right. We help big brands provide financial services in their customer journeys. So we are basically the bridge to the entire fintech embedded finance space. So if you want to have products like cards or accounts in your apps, we are the best and fastest way to deliver that.
Super. Thank you. Okay, so I'm going to dive directly into a partnership that does have something to do with this. So there was announced a fintech bank partnership in Poland between an incumbent PKO bank Polski and an e-commerce giant Allegro. So it's not just a referral partnership, but really embedded finance. So Lars, can you tell us what you mean by that?
Yes, of course. I mean, it was something quite unique, I would say. Allegro, for those who don't know it, is the biggest marketplace in Poland, both for consumers and businesses. So I think Poland is in Europe one of the very few companies where Amazon was not able yet to get to the first position. That's still what the local provider Allegro has. And in the past, they already made some waves in fintech or specifically embedded finance through their buy now, pay later offering, which they offer to consumers. That actually the volume for the buy now, pay later is bigger than what the Polish banks are lending to consumers in the sum.
Just for Allegro?
Just
really?
Allegro. Obviously, it's a buy now, pay later product, so it's rather like a short term, and probably we're comparing here to a lot of like long term lending from the Polish banks. Nevertheless, quite a unique or quite a significant volume that they have over here. And now this announcement with the bank, with PKA Bank Polski, the partnership comes on top of it. So they're doing two things through this partnership. One is a merchant cash advance product, which is basically a financing, a lending product for the merchants who are selling through Allegro. That actually is quite common, I would say, these days in Europe for a lot of these marketplaces. I think different here is that Allegro has partnered with a local bank instead of embedded lending provider. And the other thing they launched is not so much embedded finance, but more on maybe on the open banking side is where they offered an account-to-account transfer function inside Allegro, which is powered by PKO Bank Polski, which makes it a little bit like cheaper for Allegro to pay and more convenient for the customers. So overall, I think it's quite a unique announcement. I think it's maybe not surprising that it happened with these two players because Allegro, as you said, is a really, really big one and obviously a local player and probably has some relationship in the banking industry before. So this feels like the next step.
I love it because, it is a local player and not one of the American big techs. And I really do wonder if an American big tech could have done this, and I tend to doubt it. And now let's go to another country. So from Poland to Italy, CDP blocked the sale of Nexi, which is a huge financial infrastructure provider in Italy. Philipp, could you tell us more about this?
Well, I think it's interesting. What we are seeing is, so Nexi is a huge provider, thousands and thousands of employees, payments and cards and all kinds of different products in Italy. And what we are seeing is that countries are starting to have a very strategic view on their payment infrastructure. We also see this on a European level conversations regarding cards, should we be using MasterCard, should we be using Visa, all of that stuff. So these people are starting to think about payments strategically. And I think that the same has been done for other resources. So we're starting to see payments as a real utility. People don't want their water supply to be, owned by some other country. The thing how this is, however, different is that it's a strategic short-term benefit. I think that Italy will, have that under better control. We'll have the data. We don't have to worry about who sees this data, etc. But payments lends itself to a natural monopoly. It's all about costs, and the way to get costs down is by having a lot of volume. And so it's quite normal that international payment institutes exist and they have their place to pay. And I think that the best way forward for countries is actually to build local rails and to have local rails, but to really focus on partnerships with the global players, because otherwise you also lose competitiveness. So it's a real struggle on where you compete, where you partner, and where you block any kind of internationalization.
And I'm going to ask you a follow-up question on that. You were saying like water, so we're seeing payment rails being seen as critical infrastructure, correct?
Yeah, correct.
And so do we think that we're going to see more and more governments blocking these kind of critical infrastructure on the financial services side of these plays?
I think they're going to create alternatives, and they're looking into that. They're looking at a lot of the national crypto coins and stable coins and all of that. Their alternative rail, account-to-account payment, all of that is the next generation of being able to go around established players, whether that's the bank or whether that's cards or whatever it is, to provide choice. And the only thing that's enabled because embedded finance is starting to work. If you have a bank in the middle that actually tells you you only use SEPA for this, or you have a card, you can only use card for this revolution that's happening here couldn't happen. So I think that you get strength through choice.
Thank you. And Lars, did I miss anything that you wanted to add to that?
No, I think it was it's quite an interesting news. Obviously, we've seen here that the party from Italy the party who's blocking the sale is also a stakeholder of Nexi. So of course there might be like two angles to the story, but I think the point that Philipp made is obviously still there. And I think in a time where we're talking a lot here in Europe about owning our own infrastructure, having the control over these things, I think it's fair to assume that if takeovers from outside of Europe of critical financial service players is trying to be happened, that there might be some parties getting, or some countries getting involved and trying to block that. I definitely see that coming as well.
Yeah, I think we'll see more of that. Thank you. But I like the layered approach to y'all's answer. So thank you. So moving to regulation and compliance and into Germany. So the BaFin fined JP Morgan 45 million for shortcomings in their preventing money laundering. Lars, can you tell us a little bit about this?
Yes, of course, and obviously the news that BaFin is fining a local bank here for shortcomings in anti-money laundering, I think is quite a common theme. We've seen that over the past, I think, few years, quite a few times. I remember most recently also Solaris, who was also struck by a fine like this. I think this one here was with JP Morgan. I mean, if we're looking to the news, that goes back to 2021, 2022, so that's quite some time ago. I think BaFin basically discovered now that there were some activities who were not reporting on time. I think the interesting angle here specifically for this news is that, probably as we all know, that JP Morgan is bringing its consumer bank JP Morgan Chase to Germany, and we have been all here in Germany at least waiting for that for quite some time. I think the latest update is that will happen in the second quarter of next year. Obviously, there's not really a connection between the fine and the launch, but I think it's quite some activities for JP Morgan in Germany these days.
So they failed to submit suspicious transaction reports, right? That was they were delayed too much in submitting them.
Exactly. And for Solaris, what I mentioned earlier, Solaris was exactly the same case. I don't remember the amount. I think it was even higher than 45 million. Obviously, it's the reporting of these transactions is a very, very crucial part of ensuring that money laundering, terrorism financing, all these things cannot happen. And obviously, if banks or the providers fail to submit it on time, obviously that money can be long gone by then. So obviously, that's I think also the reason why it's a substantial fine.
That makes sense.
I think that just one point to that is the regulators are slow, but they do catch people, right? So in different processes. And I think when it comes to the ecosystem of startups and fintechs, I think it's really, really critical to understand that the regulatory layer is something that you can't ignore. It is there. It might take some time, but you see that they catch the people and they react. So you have to think with that in mind if you're ever a founder.
And maybe when we're into the embedded finance discussion, you can say, do you have solutions yourself that deal with some of the regulatory layers?
Sure.
You were just saying, Lars, that people have been long awaiting JP Morgan entering as a consumer bank. I'm just curious, why is that?
I mean, I think the first news or the first rumors coming out is quite some time ago already, and obviously the landscape over here in Germany is with quite a few traditional banks holding like majority of the market share, but nevertheless we're seeing more neobanks have entered over the last couple of years, plus also other banks from abroad, right, like Santander with a new opening over here in Germany. So even though the market from my perspective feels already quite crowded, there are still a few players out there who are confident enough to make some moves over here, and obviously JP Morgan Chase, even on another level than a Santander, is definitely going to make some waves here on the market. So I think the people are waiting for that to see what the impact exactly will be. I mean, first of all, what the product offering exactly will entail, but then also how the market will react and how consumers potentially adapt to that.
Very curious if they're going to be able to compete with a Revolut in terms of, the transferring fees between USD and the euro, because that can be really so inexpensive with Revolut. And now I'm going to go actually to Revolut because there was a partnership that was announced with Booking.com. I think that was just last week, where they are integrating Revolut Pay into Booking's checkout. So customers can pay with one click, they can earn points, loyalty rewards, and then, like you were saying earlier, Booking gets a lower payment processing fee. So can you tell us more about what this means?
Yes, of course, it kind of connects the dots right to the first news with Allegro and the Polish bank PKO, where they also integrated the account-to-account integration. Revolut Pay, I think, if I checked it correctly, was already launched like a couple of years ago, 2022. Initially, really focused on certain merchants, helping them to accept payments. Over the last 12 months or so, we have been seeing more announcements with bigger players. I remember there was an airline, Aer Lingus, who also integrated Revolut Pay. Now Booking.com. I think from an outsider perspective, it's not a surprise that all of these happen to be in the travel industry. As we all know, Revolut's core or ideal customer profile is a person who definitely is taking a few trips per year. Obviously, the very, very first positioning of Revolut also with the low or no expensive for international card payments and so on. There was definitely a profile for that. And the announcement was with Booking.com, the account-to-account transfer. I think also remember the news. There was quite a substantial of booking payment or of travel-related payments at Revolut were through Booking.com. Obviously, especially here in Europe, a very common or the most popular platform to book travel trips. So the partnership kind of makes a lot of sense. It's a pure account-to-account transfer for Revolut customers. Those who are not Revolut customers can still use it and make a normal card payment. I'm not entirely sure how many people who are not Revolut customer would click on a Revolut Pay option knowing that they can enter the card. So I'm not so sure about that. But obviously the account-to-account transfer is an interesting angle. What I'm right now thinking about is that obviously Revolut is missing out a little bit, but a bit of interchange revenue here through if you replace a card payment with an account-to-account transfer. So I'm pretty sure, because Booking.com will definitely save a good amount of card transaction fee, a lot more than what Revolut would have received as interchange. There probably was also a financial incentive from Booking.com for Revolut to making this happen. So I'm curious to see what more partnerships can be coming in the travel industry. I'm guessing it's very likely. Also curious to see if this kind of gets taken outside of the travel industry.
So Philipp, you also had some interesting thoughts about Revolut.
Yeah, I think this is super interesting. First, about Revolut Pay. It's again the travel industry that seems to be moving first. We're also the first ones to adopt card payments, right, back in the internet days. So it seems to me that the travel, because it is so competitive and fees matter so much, every advantage you can take, it's a super fit for Revolut. And it's a super competitive angle towards people like PayPal, right? If you want to replace PayPal, what can you offer? Well, I'm offering points and this and that. And so it gives Revolut customers, which have a significant reach, a real good reason to try it out. I think it's awesome. The second thing you see here about Revolut, which is that, and that was also the same with the Polish bank partnership, is that what you see is that the banks, or people like banks, people like Revolut, are moving closer to the customer. The products that they have, whether it's lending, whether it is a payment, whether it is all kinds of buy now, pay later, are being disintermediated at the moment by that the banks actually have these products in one format or the other, but they don't really yet have the gateway to have them in the products where they need to be, right? Especially for the big players. And it's really interesting that Revolut is starting this here with Revolut Pay, for example. And it also shows me that, in each of the countries where they're already established, they're probably reaching the normal kind of bank economics with what they can do with cards. So they're, exploring internationally and establishing themselves internationally to grow market share, but they're also creating new depth by bringing the products ever closer to the customer. So they're actually becoming an embedded finance player, almost like a Google of financial services. And it's something that other banks have been talking about. Rabobank did it at Money 2020 2 years ago, but I guess the Polish and the Revoluts of these worlds are actually leading the way.
I think they're quicker. They have some ways to be quicker. So very cool. So let's look at the funding environment. Fintech had the lowest investment in the US compared to other years for, I think, this quarter. But in Europe, things actually, went up. And it does look like for the US, it was really just those mega deals. Like there was an announcement about Ramp that had a 300 million deal with valuation of 32 billion. Can you imagine? Can you tell us a little bit about this Ramp deal and how they've ramped up? Sorry, I couldn't help myself in the last year in terms of their valuation.
So just a quick note on that. I think what you see is that investors are picking winners now. It's at that stage where a lot is happening at the Series D, E, F, close to IPO. The market is warming up towards that. There is not enough money flowing back into some of these VCs to basically provide a new layer of money for the bottom, especially in the US. And it's kind of like, if you're starting out now, you can just look at the stars. On the other hand, it is hard to grow a company 4, 5, 6 times, like the CEO of Google always said. I can 3x or 4x the company, but 5x, 6x the company is really difficult. What that shows me is that Ramp is an extremely digital product that is relatively easily to scale, and that kudos to them to be able to do that. That's what I read out of that, because it means that their growth can be very, very fast, and it is a very scalable company.
And just in this, sorry, Lars, you go.
Just to add on that, I haven't looked too much into the Ramp deal, but I just double checked it. They did a fundraise just earlier this year in July, I think, of like 500 million at a 22.5 billion valuation. Now it's not doubled, but it's close to that within like half a year. I think the sentiment I got from the WhatsApp group that I'm in with the discussion with, and if I remember correctly, was a lot about their implementation of AI, which helped them quite a lot to increase the revenue through existing customers, but also through new customers. So it's definitely insanely impressive. And if you all think back in the days, it was like Ramp versus Brex. Right now, it seems like Ramp is getting a lot more attention, especially from investors.
All right, so I think now is time, we've talked about a lot of news, to go into a deeper discussion on embedded finance. I think that, we saw embedded lending being big this year. I'm going to ask who wants to go first and tell us why this space really has heated up this year.
I think from my perspective, I mean, embedded finance in general, I think we always had a discussion, right? Like some people say it's, oh my God, so much has happened, and other people that I'm meeting saying nothing has happened, nothing is going on. I think that the unique part about embedded finance is that you have like 5 different financial products on the one hand, and on the other hand, a potentially unlimited number of industries. We're seeing a lot of embedded finance, not only, but a lot definitely in the B2B sector. And quite frankly, if you're not doing anything in that sector, then maybe you're missing something out, right? So I think this is always explains a little bit. It's not always like front page material, but definitely for those who are affected by the solutions, they can talk a lot about it. And you mentioned embedded lending. I mean, as mentioned at the beginning, I cover the embedded lending stories through my newsletter. Also going through the last couple of months of this year, there was a lot of embedded lending. I remember like Shopify Capital coming to Europe, launching in Germany and in the UK. We saw Amazon here in Germany, who had a referral partnership with ING before, now switched to a pure embedded lending provider. We've seen a lot of restaurant market, delivery companies for restaurants, like the Volts, the Glovers, and so on. They've all already in the last years launched financing products. I think many of them have followed also this year. So overall, lending seems to be a big topic. Maybe to conclude on that one, I think it's very often also a very strong value proposition for the parties involved. Very often we're seeing that companies who have really hard or very limited access to financing get financing from a provider who understands them really, really well, so can underwrite them better. Plus also for the financing or for the marketplaces, for the non-financial brands, it's often very unique way of helping the customers to grow faster. Not so much making money with a loan itself, but basically with the additional spending that will happen through additional growth.
Let me ask you something about that. Like Shopify, Capital coming here to Europe. Do you see Vinted ever offering some of their merchants the ability to get loans, or you think it's just too many people and not real merchants?
No, for sure. I mean, I'm not, to be honest, I'm not sure about Vinted, but I mean, there's eBay, there's Amazon, there's a lot of these providers who are doing that, right? Obviously, I'm not sure like who's selling on Vinted. Of course, it needs to be a company sole trader with some kind of recurring transaction to be able to offer like a merchant cash advance, because this is a typical product you would be offering there, right? And then you would look at the transaction volume maybe over the last 6 to 12 months and take an average and base it on that, right? So if that's there, then I think we're seeing it by now. Like any platform can do that.
Yeah. What I would say about the embedded finance space is there's a few dimensions that are actually facilitating this kind of inflection point, right? Embedded finance in Germany was 30 billion in 2024. It's 45 billion in 2030. And so what's really changed? And it reminds me of a story, which was like when I was just 27, 28 years old. I was at Hugo Boss in New York, and I was trying to sell them an e-commerce website. And I said, to the CEO, hey, you should really have a website. People are going to buy Hugo Boss online. And the guy said, how much does it cost? And at that time, you needed the team, a server, and you needed all the infrastructure. It's 10 million and about a year to go online. He said, no. And the CEO said to me, nobody's going to buy clothes online. This is way too expensive. We're not going to do this. Of course, he was right. People were not yet buying things online, but as soon as the other brands started selling online, Hugo Boss, of course, today sells clothes online. And I think embedded finance is shown something about 5 to 10% to the bottom line year on year if you deploy it correctly. And that means if there's somebody in your industry that's starting to do it, you have to do it, or in 7 years you have their size, right? So that's the first dimension. Other people are doing it, so now I have to do it. The second dimension, which is different, is that we have a lot of suppliers, and then there's a lot of know-how that was necessary. Just like in the .com times, you needed to know how to build a website. a few years ago, you really needed to understand finance in order to deploy financial services, embed them, right? Today, companies, make it easier, and then there are companies like AAZZUR that can really build that bridge for you. So the barrier to entry is going down, the cost is going down, the competitive nature is going up, other people are doing it, and that's why you see the adoption is starting to happen. So we are in a real inflection point for embedded finance. I know we've been saying that year on year, but I can tell you the people and the brands that I'm talking to on a daily basis are no longer just early innovators. They are, brick and mortar companies that you have heard of before that you use every day.
And what are the kind of services that you're getting asked the most about? Are they lending? Are they, other types of things, accounting? I don't know.
It's usually to add either a bank account or a card to a process that makes either a payout easier or an employee process easier or an expense process easier. And very often it is 80% of what we do is there is a platform. People, they have hundreds of thousands of users that use this platform in one way. But now if payment in and out or pay out could be faster, and this is happening on a semi-regular basis, think temporary employment, gig economy, loyalty cards, these kind of things, lending, where you want to really tie a relationship to either your employee or to customer or to your supplier, then the products are now here in place to really increase the loyalty on those dimensions. Yeah, so that's what is 80% of our business.
And just to add on that, right? I mean, obviously, totally agree with all of this what Philipp said, and I think what's really, really important here, we have seen also a couple of brands over the last couple of months who failed with their embedded finance products, and I think those companies who fail with it very typically think too much in the financial product. And when I'm trying to say it, they are thinking, oh, I'm a big brand. Everybody knows me. If I now offer a bank account, everybody would come to me. And I think here, especially in markets, like we spoke about the kind of like banking situation in Germany already, I think it's quite similar in a lot of other Western Central European countries as well. That mindset, everybody will come to me when I offer this banking product, is not really, is more like a theory, not the practical experience. So we have seen many companies who did that and failed with that. I think what's really, really important is always, I mean, this is for every digital product, I'm not saying anything new here, but always start with the customer's problem, right? If you have a core product, what are the jobs to be done? How is your customer using it today? And how can a financial product improve the experience, improve the business case for the customer, and so on, right? There are a lot of different metrics, but if you just start with, oh, now it's so easy to add a bank account, I will do that because I think it's a cool product and my customers will definitely want it. That's the wrong approach, right? I'll typically say the time you spend on launching the financial product, you should probably consider spending the same amount of time to making sure the embedding, the part between the financial product and your core product is working equally well. Because if you get that figured out, you can probably even start with the financial product, which is maybe not all the features in the customer's demand, but you can slowly grow it over the time.
Yeah, being seamless is really, really like the customer experience first, and seamlessness is really critical. And if you think from a spreadsheet to the customer, you will lose. If you think from the customer to the spreadsheet, you will win.
I love that. And I think on that, I'm going to end it unless one of you says, oh, there was something I really needed to add. But I love that last word. Yeah.
I think we can finish on that one. I think that's a good closing statement.
Super. Well, thank you so much for joining. Really enjoyed the conversation.
Thank you for having me.
Thank you.
Thank you for listening to Breaking Banks Europe,
a Provoke Media podcast in cooperation with timepledge.org.
Don't forget to shout us out on your favorite streaming platform, any social media channels, Medium, or YouTube at Breaking Banks Europe.
If there is something or someone you'd like to hear in our cast, let us know.
See you next month on Breaking Banks Europe.